Markets in Japan, South Korea, and Australia just coming online, and we are looking at, well, mixed picture, but a slight positive bias coming through as well. And Nikkei 225 is an interesting one. As we see President Trump touting a big progress, we don't really know the full final details at this point, but a big progress when it comes to its trade negotiations with Japan. And we've got some bid coming through. Nikkei 225 higher by 0.46%. Kospi an interesting one, and it is edging higher by 0.2% as we are waiting for the Bank of Korea's rate decision today. And ASX 200 is absolutely flat at the moment. Marty?
All right, Sherry, Japan's economy minister Akazawa out with comments ahead of talks in Washington. Lin is across the story. What's he saying, Lin?
Yeah, hey, Martin. So basically he is saying that he has communicated to Washington counterparts here today, overnight, in their meeting, that he wants basically a win-win solution for both sides, and that he has strongly requested the revocation of tariffs on Japan. He also said that the two sides had agreed to hold a second meeting this month, also saying that they were very grateful for the US president's attendance at this meeting, which, of course, if we take one step back, was seen as a complete surprise, and a surprise for Tokyo, because we heard as well overnight that there was an emergency meeting that was convened by cabinet officials in Japan as well. And now he also said that the US president says that Japan is a top priority when it comes to these negotiations, and said that there had been no discussions in terms of Forex, which is also quite important to note, because prior to these talks we were hearing from the Japanese side that they wanted the talks about the Japanese currency to be separate, to be conducted by the finance minister, Kato-san, rather than these talks that are happening and led by the economy minister, Akazawa-san, as well.
Lynn, you know, I mean, the Japanese are being very diplomatic and polite about that. Very grateful that Trump dropped in to meet us today. They've agreed to hold a second meeting. I think that second meeting is actually necessary, and probably more to come as well, because, I mean, the Japanese went into these meetings, if I'm not mistaken, and you've been following the story more closely than I have, looking for basically a big win. It's like, look, to get the U.S. to absolutely, totally drop the tariffs, right? That's not what happened. These talks that that just wrapped up were supposed to be strictly about investment as well as the currency. It ended up with President Trump dropping in being about a lot more.
Indeed. And if we look at particularly the post that he put out on social media late yesterday, Asia side, and if we have that, it would be great to put it up as well. He seemed to talk about the fact that these negotiations were going to be about tariffs. He said also about military costs, as well as trade fairness. These were some of his comments coming through. And already we're hearing commentary about the fact that there was a bit of surprise again coming through from Tokyo, that the military costs part was tied to the trade part of it. And if we look at the delegation that Akazawa-san brought with him, there were people from industry, there were people from finance, but there was reportedly nobody from the Ministry of Defense as well. So this is going to be something that we will be watching out for. We've just got Akazawa now saying that he is making no comment on the specifics of the negotiations. That is, of course, the key here, because, again, going into these talks, there were still so many questions and speculation around exactly what the US president was looking for.
And Len, I just want to point out, guys, that the dollar-yen chart for today's session is quite interesting, with the dollar actually showing a pretty big spike, a pretty visible spike. So I think that goes to show how the market is closely watching these trade negotiations. But I do want to bring in the angle of rice here. So Lynn and I, we were talking, before this chat, how South Korea and Japan, it's really a matter of, I don't know, cultural attachment or national pride. So that's why these two countries were were able to defend rice from their respective bilateral trade agreements with the United States. Now I'm seeing this Reuters piece suggesting that Japanese consumers are already opting for foreign grains because the homegrown grains are more expensive. So perhaps Japan can kind of let go of the rice piece in this trade negotiations as well.
Sherry, this is a fascinating point here because, we've been talking about inflation in Japan, and what has been the major contributor of inflation in recent months? It's been rice prices effectively doubling on a year-on-year basis, and we've got the government set to release its third tranche of its strategic reserve. That's how bad the situation is. There is a major shortage. So indeed, on the one hand, you would think maybe this could be something that could set about a win-win, right? You have a shortage, so let's lower some of those tariff barriers in relation to rice imports and also make the U.S. happy. We know that the White House has on a couple of occasions noted the extremely high barriers, it says, in terms of what those tariffs are. But on the other hand, let's not forget the politics here and why in 2018 the late Shinzo Abe worked very hard to exclude rice from that trade agreement, because it's highly political, highly sensitive for the farmers there. Keep in mind that Shigeru Ishiba as well is a rural man, and he is known to represent that portion of the population and, of course, ahead of the upper house elections.
Guys, I can't help but think that although it makes total economic sense, right? They've had a bad rice crop, there's been bad weather, so the price of Japanese rice, I think, has rocketed about 70% in the last year. So sure, it makes sense, right, for them to go, okay, U.S., we will lower our rice tariffs, right, to let your rice come in, Calroy's rice, etc. But, for the Japanese to do that, I think it's just really hard to stomach because they've got, as Sherry pointed out, they've got a spiritual attachment to rice. I mean, as do the Koreans, to be fair, right? It means a lot to grow and to eat your own homegrown rice, and to have to import it and buy it and cook it and serve it to your own people. I think culturally it's tough to swallow, I think.
Indeed, and perhaps that is underscoring the scale of the situation in Japan. Like, we think about Japanese rice as being a complete delicacy, right? The koshi hikari rice, very well known. And now you're talking about the fact that the Japanese are willing to buy, overseas rice, particularly from the US as well. So that underscores just the extent and the scale of the problem here. And that's why you've got some people saying, is this potentially an easy win for Japan? Because certainly there are other issues that are going to be a lot more hairy, a lot more delicate. We're thinking about the currency here as one. And then, of course, let's not forget that elephant in the room, which is China. You've got these reports by the Wall Street Journal about Scott Bessent wanting to use these trade talks with their trade partners as a way to isolate China as well. And, of course, China is Japan's biggest trading partner.
Indeed. All right. Great stuff as always. Thank you, Lynn there. Right. We're going to have more market updates coming up after this quick break. There is disappointment in the air after Fed Chair Jay Powell overnight remained non-committal on any imminent rate cut, saying he needs more clarity before making any moves. We leave you with one of his comments that he came out with overnight. Take a look. We're right back.
As we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored.